The rapid evolution of money, from paper to digital and now to blockchain-based assets like stablecoins, is reshaping how individuals and small businesses interact with commerce. Stablecoins promise faster, cheaper and borderless transactions, yet they also introduce new challenges related to trust, regulation and financial literacy.
And as countries adopt fragmented regulatory approaches and the private sector pushes innovation forward, understanding the real-world implications for end users becomes crucial. Now, to discuss stablecoins in more detail, why they matter to consumers and the risks and rewards of integrating them into everyday financial activities like payments, we are joined by Ramesh Siromani, Executive Vice President and Chief Operating Officer, Personal Banking at the Royal Bank of Canada. Ramesh, welcome to Sibos TV.
Thank you, Olivia, and thank you, Johnny. Thanks for having me here.
I'm going to ask a very simple question to kick off the discussion. What exactly are stablecoins and how do they differ from cryptocurrencies like Bitcoin?
Great question, and I think it's the topic du jour, stablecoins. Think of it as digital currency, right? So you have, like you mentioned, that there's cryptocurrencies and Bitcoin. That's one form of digital currency. Stablecoin, as the name suggests, is a stable form of digital currency. So you have currencies which are crypto on the blockchain, which has all the elements and the things that make blockchain useful. And stablecoin is backed by fiat currency, like it could be a US dollar, it could be a euro, and that makes it stable and therefore pegged to a stable currency and called stablecoin, or it could be another form of creating stability, like an algorithm, which doesn't exist anymore, but that's what brings the stability to stablecoin.
So what are the practical use cases for stablecoin today for individuals or for small businesses?
So I think we have to go all the way back to the uses of blockchain and what makes that useful. So anything on a blockchain kind of has instantaneous clearing and settlement at the same time. It has programmability and so on. So when you have a currency on the blockchain, it brings all the benefits of what we expect in a blockchain. So if you combine stablecoin with that, so you can imagine use cases like if you need to move money P2P, especially cross-border, where there's clearing and settlement mechanisms today which can be improved. This can make it a little more instantaneous. Or if you imagine like global trade, where small businesses need to move money back and forth between buyers and suppliers, you could see a form of stablecoin being used. Or payroll, international payroll. There are people kind of working gig economy and workers globally. So you could see them kind of moving this money pretty quickly. So these are emerging use cases. There are existing forms of moving money which do the same thing pretty usefully. This makes it a little more instantaneous.
So why should the average consumer care about stablecoins? I'm talking, of course, about a lot of people watching this right now.
No, a very good question. I think if you take today what we have available in terms of you want to shop or you want to move money, you want to pay somebody, we have enough rails and existing systems and infrastructure to make that possible. What stablecoin does is actually evolves this into the future. So where you can see clearing and settlement systems being a little more efficient, a little more cost effective, a little more transparent. And if you see programmability, it can bring, use cases have to evolve where you say, I'm entering into a contract with you, and electronically, can we have a trigger to kind of make the payment as soon as you pass on the goods to me internationally? Or things that make it a little more, or for example, in places where there is volatility of the currency, those people need to have a safe kind of haven currency where it could be a US dollar, it could be a euro, where they say, hey, I don't want volatility in my savings accounts, so can I keep it there? So there are some use cases evolving, but I think present forms of money and movement actually for the day-to-day customer is actually well served.
If a customer is offered to get paid in stablecoin, what should they be considering in that moment?
Great question. A few things. I think one, like I said, who's issuing the stablecoin? What is it backed by? The stability. What brings the stability to the stablecoin? What is the reserve behind it? It's very important to understand that and understand the issuer. Understand the regulation in your country, whether it's regulated. Is the deposit, if you're doing something in money, is it insured? What kind of tax liability would you kind of have? And what kind of infrastructure do you need to have as a person or as a small business? For example, you need a wallet to keep that currency. You need custody player who kind of keeps custody of your money and the infrastructure to kind of account for it, move it, etc. So those are the few things I would think an individual or a small business should consider.
We've talked a lot about the benefits of stablecoins, but in your view, what are the risks and concerns with using stablecoins as a form of money?
I think, Olivia, this is a new form and it's evolving. We've just had the Genius Act in the US, MiCA in Europe, and a few other countries have introduced, like Hong Kong and Singapore, introduced regulations. So it's kind of evolving. So for an individual customer or a small business, they need to be careful about, hey, what's the regulation? How is it evolving? What do I consider, like I said before, in terms of tax and my personal kind of infrastructure and holding the money? So you need to be a little more careful about entering into, why do you actually need to do it? Is there other forms of payment? This morning we had Swift announce, getting into the ledger. So Swift has a great messaging system. And if you combine that with the movement of money on the chain, that makes it powerful, right? So do you have existing forms that can take on what you need to do? So those are the few things that the customer needs to consider.
So where is this all heading, Ramesh? Can you see stablecoins becoming a mainstream part of how we all spend and save and more importantly, get paid?
Great question, Johnny. I think I was listening to your previous interview and where we were talking about a coexistence of many forms of payment. A form of payment to be really useful has to be, ease of use. It has to be trusted. And it has to be done at scale. So these things have to evolve. We are living in a time of inflection where you see in the next 4 or 5 years, rapid adoption. Adoption needs to get up to that level where people trust it. People know what they're getting into, who are the issuers, what are the regulation, and so on. So we need to see that happen. I think it'll happen rapidly. You also see coexistence of traditional currencies, CBDC, like we talked about, and also some sort of stable coins across the globe.
You've already touched on this a little bit, but let's press on further. What does the regulatory landscape look like for stablecoins, and are you optimistic for how it will eventually develop?
I think the Genius Act in the US, MiCA in Europe, I think have started to bring in that certainty around regulation. It needs to evolve further. For example, in Canada, where I come from, we are still kind of waiting for regulatory clarity around this. So what it'll do is give certainty to customers about, hey, is this somebody you can trust? Is this a reserve? What makes it a reserve kind of coin? What kind of reserves do you need to make it stable? For example, you need to kind of invest it in treasuries or keep it in cash. What makes that stability? Who's a custodian who can be trusted? Do they get registered by the central bank? Like what form of kind of security do you kind of gain from that? So those are the sort of things an individual customer needs to keep in mind. I think regulation is catching up, more to come.
So where do you see the role of central banks and central bank digital currency, CBDCs, in this evolving ecosystem?
The big difference is the stable coin is issued by either a bank, FI, or a non-FI under regulations, right? Under the regulation of each country, whereas a stable coin is issued by the central bank. I think they will coexist. There's some sort of need for CBDCs. There's a need for stable coin. And the current forms of payment provide all the necessary things that a customer needs. So we see this as an evolving ecosystem with all three.
And just a final question to wrap up. What should a small business be aware of if they're actually asked to accept payments in stablecoins?
A wonderful question. I think, like anything else, the counterparty risk, whether it's stablecoin or any other currency, who's the other party? What kind of, knowing your customer on the other side, or kind of are they following AML and other regulations, volatility of the currency being offered to you, the tax implications, making sure you have infrastructure to accept currency, making sure you have the ability to invoice in stable coins. Those are the sort of things the small business needs to take into account.
Well, Ramesh, it's been great to have you here. Thanks for breaking that all down for us. I hope you do enjoy the next few days here in Frankfurt. That's Ramesh Siromani, Executive Vice President and Chief Operating Officer, Personal Banking at the Royal Bank of Canada. Thanks again, pal.
Thank you very much.